So if you've been watching these things over the last few months or even the last year, you probably think of this scenario. Okay, tariffs hit us back in March or April. We thought inflation was going to skyrocket, unemployment was going to skyrocket, and it was going to be dismal for the housing market, the interest rates, the stock market, and everything. What have we seen since? Well, we had rates go from about 8% to 6%. We have a stock market that is an all-time high. So now would we get data that's like this? Consumer inflation just came in at the slowest pace since 2021. It's going to throw a lot of economists on their ear. If you watched last night's video, well, I'll try to put it right up through here. I actually said, don't be surprised if consumer inflation comes in a little bit lighter, and it's because of oil. So if you're a little confused with this and you're watching this to figure out what's going on with these, folks, you're in the right place, because my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states. My goal is each day is to come in and explain to you guys what next going on with those and why. So today we're going to talk about inflation. We're going to talk consumer inflation. Then tomorrow we're going to talk producer inflation. Then by the end of the week, we'll put all this together and I'll have a little bit more of an understanding for you guys where rates are going to go. But join me today. We're going to come out with my 2026 official mortgage rate forecast. I'll give you hints in this one, but let's get to today's rates, folks, because that's why you're here. So here's what we got today this morning. Inflation eases in December. Core consumer prices rose at the slowest pace in 2021. Now, a lot of economists are going to come back and say, oh, well, I knew this and I knew that. But let's get over to the trend of this so I can explain to you guys really what's going on. So here's the data we got today. Okay, so this is really what affects the market. So if you're trying to figure out what's going on with mortgage rates, you came to the right place. So what we're looking at today is we got ADP payroll numbers. Okay, we're going to just throw those out with the trash, but they came in kind of at point. Last reading was 11,500 people got jobs during the week, and 11,750 people got jobs this week. That's a good number. Okay, so if you go through here now, let's look at the inflation. So we have the jobs report saying the jobs aren't crashing. Now let's get over to consumer prices to see what they're doing. So let's go down through here, and I want to look at core first. Core means they stripped out food and energy. And this number I thought might be right on point or a little bit lower. Man, we called that one too. So let's get over here. Core came in previously at 0.2. All the analysts were saying it's going to come in at 0.3, and I said yesterday, don't be surprised if this comes down. So it came down a little bit. Here's where I kind of nailed it. I said the core CPI, it came in at 2.6. They're saying it's going to come in at 2.7. I said this is probably going to come in at 2.6, and it did. Okay, so where I thought it would be a little sticky is down through here. So we're staying at 2.7% on the CPI and this. What does all this tell me? Well, basically it's telling me inflation is not running out of control. And with the ADP payroll report, it's saying the jobs aren't falling off a cliff either. Why does this matter? Let's get over to this thing. The Federal Reserve, this is what they monitor. And I know we go over it every day, but we might have some new people here. So the Federal Reserve, they control that rate over there. It's called the federal funds rate. It's basically when a bank needs money, they go to another bank and they get it lent to them at those rates. I wish I could get those. But what the Fed watches in the markets, they watch these things right here. The PCE, that's the inflation that they look at. I look at consumer inflation. How much am I paying? Well, on the PCE, it's almost at 3%. This is where they're like, okay, we need this at 2, but I don't think it's going to get to 3. So they're like, okay, we're going to see how this works with tariffs and everything else. So they kind of punted on this thing. Now, the unemployment rate, this is where they're saying, okay, now this part's where it's going to be dismal. But last week, we got a new unemployment rate that actually went from 4.6 to 4.4. So it's saying the jobs market isn't terrible and inflation's not running out of control. Well, that was validated today. If you go to the news, you go to the economic news channel, we have jobs. It's not falling off a cliff. As long as jobs are about 50,000 a month, that's net neutral. Think of it that way. And then we have the inflationary numbers right through here. They came in either at point or better than expected. Okay, so now tomorrow what we're going to get is PPI. This is producer inflation. But let's see what this reaction has in the markets and on Wall Street. So the first thing we want to look at is mortgage bonds. Mortgage bonds, they're liking this news today. So the MBSs, they're up 21 ticks. Now, it is a roller coaster right now, folks. So let's rewind to where we were on Friday. So on Friday, what happened, the president came out and he says he's going to force agencies like the Fannie Mae, Freddie Mac, Ginnie Mae, he's going to force them to buy mortgage-backed mortgage-backed securities. So here's how I follow mortgage rates. And if you want to really get precise, subscribe down there. So every day I post a video, you can get an alert and we can watch these things. So here's how mortgage rates work. They're controlled by that bond right through there. See over there, it says MBS. It's a mortgage bond. Up through there, you see 101.42. That's the price of the bond. Okay. The number next to it says 0.18. If the price of the bond is going up, we love it. That means mortgage rates are coming down. Let's see what happened on Friday. Here's what happened on Friday. President Trump came in and said, okay, we're going to start buying mortgage bonds. That's kind of what they did. Well, the Federal Reserve did during the COVID, brought rates down to like 3%. They bought bonds, driving up the prices. Remember I said when the price goes up, rates come down? So here's what happened Friday. The president came in and said, we're going to start buying mortgage bonds. The market reacted tremendously. Okay, but I said, well, this is kind of rumor. It's not really coming to fruition. If you check yesterday's video, I'm like, we're going to give all this back. And we did, and more. So now mortgage rates, if you look at it basically back to a month ago, they're basically where we were a month ago. We lost that little reprieve that we had on Friday. But you guys might have been alerted from me and my team. If you have been or haven't been, we have a tool over here. This is for homeowners. If you want to try to follow it, try to figure out what a good position is to refinance. Like Friday would have been awesome. Unfortunately, you only had about 15 minutes to lock in that rate and then they were gone. So how do you track rates to figure out if it makes sense to refinance? Well, go to my website and I created RateWatch 2.0 right up through there. What I do is I monitor this for you. Put in your mortgage information, let me know what rate or how much money you'd like to save each month. It'll actually scan that and do it. It'll actually tell you, okay, your rate dropped to this point and or you're saving this amount of money. Folks, we don't sell the data. I monitor this personally. The other day, hundreds of these triggered. I couldn't get to them. So we sent out a blast email. If you want to get in the front of the line to look over those numbers, please reach out to us. But we have a new system. So even if you subscribe to the RateWatch 2.0 previously, this is changing to RateWatch 2.1 today. So go back in, put in your information. I created an AI system for this. It's awesome. But let's go back and figure out where rates are going to go from here. So let's go over in 15 days, the Federal Reserve is going to meet. What are they going to do based on this news? Well, they're not going to do anything at this point. If you go down through here, there's a 95, yeah, it's still there, a 95% chance the Federal Reserve's not going to do anything at the next meeting or the next meeting or the next meeting after that. So what this is right through here, right through here, it gives you what the federal funds rate is or what it's expected to be. Remember I said it's 3.5, 3.75? You can see that right through here. Okay, so that's where we are now. So they're expected at the January 28th meeting. It's going to be a 95% chance of staying there. Following meeting, 75% chance of staying there. And then even at the meeting after that, there's a 62% chance they're not going to cut. So when are they going to cut? Well, that's what we're trying to figure out. But even though the Federal Reserve cuts rates, you know that a lot of times mortgage rates go down. So the markets look at these things right through here that we paid attention to. So the rest of the week, like I said, we got great consumer inflation numbers today with the CPI. Tomorrow, the PPI, I'll give you that at my closing bell today, or where I think that might go. And then that's kind of it for the Wednesday. Then on Thursday, we're going to get continued jobless claims and initial jobless claims. Now let's wrap this up because Friday I come in live each Friday to explain how the week went and the things that really pivoted the markets. Well, what's going to happen this week is we got initial jobless claims, continued claims. That's going to give us the jobs market reports. And then we have the CPI and the PPI. If you're all confused, we're getting a ton of data this week. It's going to fill in the void of what the Federal Reserve really, the data they haven't had. So I don't really think, let's get over to the other piece of the puzzle where I think rates are going to go. Let me give you a sneak peek of what I'm going to announce later. I don't really think rates are going to move all that much. So my expectations are this. Mortgage rates are going to be between 5.875 when we get there, I don't know, and 6.25. Okay, we eased from the 6.25. We kind of thought was going to test it yesterday. Mortgage rates started running rampant, even though this says mortgage rates went down. Let me show you the bond just to show you that. Yesterday they said the mortgage rates went actually down. But that's hard to believe because the market went down, down, down. And again, when these go down, rates go up. So mortgage rates did go up a little bit today. I think this will catch up with the news today on the mortgage rate front. But here's what I'm expecting. If you're out there and you're looking to buy maybe in the next few months or looking to build, you're going to be in an okay position because I don't really think the news that we're getting today is good news, but it's not enough to really affect the Fed. They're not going to cut. They're not going to do anything. And I don't really think the markets are going to do anything. But they'll focus in daily on the things that we focus in on as well. So I don't think mortgage rates are really going to move all that much. They might start trickling down in a couple months when the Federal Reserve has a whole new cast of characters. If you don't understand that one, continue to watch my channel because you have to know these things if you're trying to figure these things out. So now let's get over and see how the markets are reacting to all this. So for that, we go over to CNBC to see what's the markets doing. So far, well, this is a pretty good market. We have the Dow Jones, the S&P, and the NASDAQ all up. I think the Dow Jones hit another record high. We got oil up at $60 a barrel, folks. We don't want this at $60 a barrel because this is the biggest catalyst right now that's bringing down those inflationary numbers. And then we do have the 10-year Treasury behind me coming down. So I'll say this is somewhat of a Cinderella story. I don't like oil over $60 a barrel. Let's get over to what crypto's doing. And now we are at $92 for crypto. This is about $80 coin about a month ago. So the markets are going fairly well through there. The last but not least, what we're going to start focusing in on over the next 2 weeks, we have a lot of earnings reports coming out. Today we had bank earnings come out from, who was it, JP Morgan and these other ones. But if you look over my head, they're all hitting forecast or exceeding forecasts. So I'll start going over where the earnings estimates are coming in, how they're faring, because if the corporations are doing well, that means you're doing well. That means the economy is doing well. And overall, that means these things over here won't do so bad either. So folks, hopefully now today you understand a little bit more about what goes on with these and why. I know we talked a lot about the CPI, PPI, inflationary numbers, the Fed, and everything else. So if you really want to learn all this because you're a mortgage advisor, maybe a realtor, or just a homeowner or home buyer trying to understand these things, please subscribe over there because every day I have a little bit more information that'll just help you out. And make sure you check out my YouTube channel because we have over 6,000 videos. Yes, 6,000 videos to help you understand real estate. So folks, my name is Dan Frio. I actually do this report every day to inform you guys what the heck's going on with these and why. And the reason why I do it is I'm actually a loan officer licensed in all 50 states as well as Puerto Rico. And my slogan is this: it's one application, one credit pool. We're going to compare your loan to over 30 different lenders. Now, how do we do that and why? Well, the bank I work at, I've been blessed that they provide me a license with all 50 states as well as Puerto Rico. But here's the cool thing. They came in and said, okay, when people call in, we don't want to lose clients. We want to make sure we can place every client that calls. So here's what we're going to do. We know they need more products and probably better rates. So we're going to set ourselves up with over 30 banks, credit unions, and other lenders. So when people call in and get approved with us, we actually can compare your loan with over 30 different lenders to assure you're getting the best rate and lowest fees in the market. So check out our website right through here. I have a bunch of tools for you. If you're trying to see how you can compare maybe the rate quote you got with all the lenders we have, there's a loan estimate review tab right up through there. Upload your loan estimate. Only thing we need is what your credit score is and when you're looking to close so we can meet those parameters. And what I'm doing is if I can beat them on the fee and the rates, I'm hoping to win you as a client. So check out our website and make sure you come in every day and click the subscription over there and watch my videos so you can understand a little more of what went on with those and why. So thanks for watching, folks. God bless. I will be live today with my 2026 official mortgage rate forecast. I don't think you'll be surprised with the numbers, but I think you'll be surprised with the content. So join me today to learn a little bit more about real estate, folks. Other than that, have a fantastic day.